Problem 10-34. We're going to be working with Goodwill, patents, and trademarks. So Midtown Telecom, a communication provider, had the following transactions dealing with intangible assets. So we're going to have 4 transactions that we're going to have to record. But we don't need this window because the transaction information is also down here. So on February 13th, Midtown Telecom purchased another company called Samson Wireless Enterprises. They gave up $480,000 cash, and they also signed a $720,000 note payable. So what did they get? The company that they acquired, Samson, had book value of assets that were $700,000. But the market value of those assets were $1,100,000, and the market value of the liabilities, $520,000. So we get to record the transaction for acquiring this company. So the first question is, for this company's assets that we're acquiring, do we record them at the book value? In other words, what the Samson's books had them on their accounting records, or do we write them at their market value, which is $1.1 million? Well, the answer is we use the market value. So the market value of the assets that we acquired is worth $1,100,000. We also received some liabilities. Now I'm going to skip a line, and we'll see in just a minute why. So our liabilities that we inherited in this acquisition are $520,000. So we also gave up some cash. So that will be, since our cash is going down, that is a credit. How much did we give up? $480,000. 480,000. And we also signed a note payable of $720,000. So let's do some math and see if our debits equal our credits. So I'm going to add up these credits and see what we get. So we get $520,000 plus $480,000 plus $720,000 gives us $1,720,000 for credits, but we only get assets of $1,100,000. So we have to make this transaction balance. So we're going to take the difference between $1,720,000, subtract $1,100,000, and we have to put that on the smaller side to get it to work. So we're going to have an asset that's valued at $620,000. So what is this asset called when we acquire a company and we've given up? So this is what we've given up versus what we've received. That's called goodwill. So goodwill exists as a balancing number when we acquire a company. So we need an explanation to purchase, to record purchase. To record purchase of Samson Wireless. There we go. Well done. Then on April 1st, we paid $400,000 to acquire a patent. Midtown believes the patent's useful life will be 10 years. So we now have another intangible asset. By the way, goodwill is an intangible asset. And the patent is worth $400,000. Copy and paste. We must have used cash for that. Purchase patent with cash. So we'll have to amortize that later. Next, on October 1st, we paid $820,000 for the trademark the trademark Fast as Lightning with a useful life of 20 years. So we now have a trademark, which is an intangible asset, worth $820,000. And we paid cash for that. Let's see here, cashola. All right, excellent. Now, December 31st, recorded amortization expense separately for the patent and trademark. We have to do it separately because they will have different useful lives. Start by recording the amortization process for the patent. You will be asked to record the amortization expense for the trademark. Do not round interim calculations. Enter your final answer to the nearest whole dollar. So here is how we're going to calculate the amortization on the patent. So it's straight line depreciation, and which is going to be cost minus residual value divided by useful life. So let's see what the cost of I'll show you where I'm getting the 400,000. So here's the 400,000. That's why I'm using 400,000 here. Most intangibles have a zero residual value. So 400,000 divided by the useful life of 10 years, which we get from right here. Now, we did not use it for a full year. So we started April 1st. So we did not use it in January, February, and March. So that means we use it from April through December, which is 9 months. So that's why I've used 9 months. So 400,000 divided by 10 is 40,000. Times 9 divided by 12 gives us $30,000 of amortization expense. So the expense goes up, amortization expense on the patent, and then the value of the patent goes down directly. Remember, there is no accumulated amortization account. So to record amortization on the patent. And then we need to record the amortization for the trademark. So we can get rid of this. I guess you can leave that there. Let's bring in the amortization for the amortization calculation for the trademark. So just to show you, to remind you, the data for the trademark is right here. So the formula again is cost minus residual divided by useful life. The cost was $820,000, which we get from here, minus the zero residual value, which most intangibles have a zero residual value, divided by 20 years, which I get from here. And notice we bought it on October 1st, so we're going to use it for October, November, December. So we use it for 3 months out of 12. So 820,000 divided by 20 times 3 divided by 12 gives us $10,250 of amortization expense for the trademark. Amortization expense goes up, and then the trademark goes down directly. To record amortization expense on the trademark. Okay, what special asset does Midtown Telecom's acquisition of Samson Wireless identify? And how should Midtown Telecom account for this asset after acquiring Samson Wireless? So they're basically asking you, what's this asset? It's Goodwill. The acquisition identifies the asset called Goodwill, which is basically saying you gave up more than the market value of the things you received. So Midtown Telecom should measure the fair value of this asset each year. And that's a pretty complicated topic. It's beyond the scope of this class. So when you take advanced accounting classes, you can learn how they do that. Now, if this asset has increased in value, Midtown should record nothing because accountants want to be conservative. And if the value of the asset has decreased, however, Midtown should record a loss and write down the value of the goodwill. Again, because accountants want to be conservative. And that's it.